Hi there, this is Chris from MoneyHub, and this is our guide to reverse mortgages. So it is going to be quite a detailed guide, as you can see by the length, but the important thing is that any information that you need, you can see our link to the reverse mortgage guide below, which comfortably takes you through pretty much everything that I'm going to talk about. Of course, it's in a lot more detail. Second to that, we've also linked out to the age concern guide to reverse mortgages. So age concern being an advocate for people 60 plus. They've helpfully linked to MoneyHub as well to our guide, so that makes it really, really useful that, we know that our guide's trusted, and we know that our guide's is certainly something that people rely on. So without further ado, I'm just going to explain what a reverse mortgage is, and then I'm going to go through a summary of the guide. Of course, I'm not going to cover everything, but this is just going to give you some information about, exactly what you need to know, the questions you need to ask, and the next steps. So first of all, what is a reverse mortgage? What is a reverse mortgage? You may have seen adverts on TV about people getting out some money from their house and going on holiday, or, purchasing a car or anything like that. What it is basically you take out a mortgage on your home, and it's a cash advance. So rather than paying it back, you get the money, and then that's your money then to spend with what you want. How much you can borrow really depends on the value of your home and plus your age as well, which I'll get to which I'll talk about shortly. But yeah, the structure of these is it's cash up front. You've got complete freedom to do what you want with the money. The only thing is that the interest rate, which is charged to the loan or charged to the reverse mortgage, that's usually a floating rate. And so at the moment, it's around 6 to 7 to 8%. And that will mean that, your debt keeps getting larger and larger. So when it's time to settle the mortgage, to repay it, that comes out of the house sale. That's as simple as it is. There's nothing too complicated with reverse mortgages, but it's just keeping in mind that if you did take out, say, a $100,000, then say in 10 years time, you may have to, deduct about $150,000, $160,000 from your house sale to pay back that original $100,000. So we've done some graphs below, which I'll get to, and some tables, but it's just good to know exactly, what you're looking at there. They are popular. I would say that people tend, from what I've read online, people are, probably tend to get around $50,000, $60,000, $70,000 out for the first reverse mortgage. That's kind of the amount that people like to have. Sometimes, they just want it for a specific purpose. Sometimes it's more of a plan to, use that to fund their retirement. But whatever the reason is, people aren't taking out like huge amounts usually. But those small amounts can still add up. So let's just go through what I'm going to be looking at. So how much you can borrow, the pros and the cons or advantages and disadvantages, the reverse mortgage providers, and then also facts, frequently asked questions, and then just a summary of a conclusion. So how much can you borrow? The answer is this depends on what your house is worth, and then also how old you are. So if you're 60, you can get 15% of your home value, but if you're 85, you can get up to around 40%. The reason is they don't expect people at 85 to live so long, whereas 60 is quite young, it's relative. So that's why you can borrow more, because they know that the debt which is taken out, that will be charged interest, of course, but it's not going to rack up to huge amounts because, well, unless you live up to 105, but, they do it based on stats, and what they know, so they're comfortable with those. So most people probably come in at around 20, sort of 25%, maximum, but it's rare that they take it from what we've seen. And yeah, so that suggests that the average age is around sort of 65 to 70 for the reverse mortgage. Now, what are the advantages of them? Let's just go through this quickly. You can receive a cash sum like upfront, so that's what people like. That's the kind of like the sole purpose, that it's just money in the bank straight away, no questions asked, other than, of course, you have to go through the legal procedure of it all, and you don't have to repay it until your home is sold. Now, this is no issue if house prices are increasing as well, because, if you take out 50,000 and then say 10 years later you have to pay back say 80,000, but if your house has gone up, then actually you're probably no worse off. But yeah, at the same time, houses don't always go up, and certainly we've seen post the COVID response that house prices are certainly not going up anymore. So you are sort of guaranteed by some lenders that you'll never go into negative equity. So this means that you won't actually owe more money than your house is worth. But that's on a case-by-case basis for lenders. And certainly if you took out lots of money at age 85 and then lived to 110, then you may go into negative equity on paper, but actually it's probably likely that the agreement would be you won't. So your house won't be sold sort of like prompted if it gets into some sort of negative equity threshold or anything like that. So trying to keep it very simple here. The reason that that reverse mortgages like appeal to people is because there's not that kind of risk. That something will trigger your house being sold while you still live in it, so by the lender. So that's sort of what they play by. There's no sort of shortcomings from that. What are the disadvantages? Now, it probably sounds that I'm quite positive about them from my sort of tone of voice, or also like the way I've been talking about them. But the reality is there are certainly a lot of disadvantages, and I'm very kind of negative on them overall, just because of the higher cost and also the way that they're marketed. But that's just my view. It's not financial advice. But yeah, so first thing, they do require you to stay in your home, and there are restrictions about it. If you want to rent it out, or if you want to go overseas or something like that, then sometimes, and like it does depend on the reverse mortgage lender, but that would trigger you to be actually you're no longer living there, so it needs to be sold, and then that would like repay the reverse mortgage. So that makes it not that flexible. The second thing is the interest rate is going to be higher than what you would normally get from a mortgage. So that's because it's just a different product. It's a reverse mortgage, not a standard home loan. So that will float. So where it's currently around 8%, for a reverse mortgage, whereas mortgage rates will oscillate between 4, 5, and 6%. And that 2% difference, even on a $50,000 loan, a $70,000 loan, reverse mortgage, those do add up. So that is why I would call it sort of higher interest, and this also compounds the fact that you're not making any repayments. So normally, if you take out a mortgage, you make sort of a monthly repayments or fortnightly repayments, and the balance goes down, the interest charge goes down. Whereas here, nothing is happening. So you're just taking that. It's like going to like taking your credit card, going into the ATM, and taking out say $50,000, and you agree that you'll be charged 8% a year on that, say for example, and then slowly that interest just keeps building up and compounding. So that makes it problematic, and it makes it expensive if you decide that you want to try and pay it back, because you need to have more money to pay it back, and that's not always available, especially if you're retired. There are fees. That's what they don't say that's so upfront, but once you have a look in the details, then you'll see the process does incur these home valuation fees, application fees, drawdown fees if you want to take out your money, mortgage discharge fees when your property is sold or when you decide to repay the mortgage, and these can easily top up around sort of $2,500, $3,000. So just be aware of that it's not just going to be free money, like no problems. You do have to fund some of the fees that are part of the contract. Now, you also need to very carefully follow the mortgage contract, which means you have to keep up with the home insurance, you have to pay the rates, you have to look after the property, and then there are also issues with the fact that some reverse mortgages won't be applicable for homes like lifestyle blocks, farms, leaky buildings, all that sort of stuff. Retirement villages, you can't do them on that either. And then some issues with some cladding system. So it's just worth sort of noting that, while it sounds like free money, there's a lot of cost. So the next thing to do is look at the must-know facts about reverse mortgages. This is really important because it shows you exactly how expensive they can get and how that can happen very, very quickly. So as it says here, the interest rate is high, it compounds monthly, which means it's charged and added on monthly. And then because you don't make repayments, the balance that you owe will climb fast. Let's go through an example here of someone that takes out a $100,000 reverse mortgage. Say their age is 60. They've gone into a reverse mortgage where it's 8% per year interest rate. And then, so what we're saying, if they take out $100,000 at age 60, then by the time that they turn 80, that $100,000 will now be a $492,000 loan or reverse mortgage. Let's just work through that from our trusted compound interest calculator. So we take the $100,000 and we add on 8% there, which is the annualized interest rate, which compounds. And then the number of years is 20 from age 60 to age 80. And we choose that it's going to compound monthly and we push calculate, and that's the number. Now, of course, if we go back to this, if someone lives to the age of 90, it's going to turn into $1 million of debt. Or actually $1.09 million of debt. So let's do that. So that's going to be 30 years of reverse mortgages, with nothing being repaid, and that's where that's the amount that's owed. So this is why it's a very, very sort of debt-inducing process. It does sound attractive, like, take out $50,000, don't worry about it. But the reality is, even if you take out, say, $50,000, and then you do it at, say, 7%, and you do it for, say, 15 years, that's still going to cost you, $142,000 to repay. So the higher the interest rate and the longer that you have the reverse mortgage drawn out for, that's going to really add up. So even if you get it for another 20 years, that's going to then add on another, $60,000, for an extra 5 years of mortgage. So it does become very costly, and that is something that you really need to be aware of. What we've said here is that if you do want to borrow from a reverse mortgage, please be economical, because the issue is people sometimes take out the full amount of money that they think they'll need. We put some of it into a bank or into a savings account, but it's not really earning much interest. At the same time, you're being charged the top rate, which is perhaps the 8%. So we think that if people can just draw down what they need, that's likely to make it more cost effective. And otherwise you are just overpaying for for money that you're literally just sitting on. With reverse mortgages, they are a debt, and that means that when your property is sold, that has to be cleared first. So we've got quite a strong example here from Paul and Tony, and it's about their house in Auckland and the fact that they borrowed $100,000 on it, and then how the debt kind of works through. So we'll let you have a read of that, but it's just one of many examples of how these work, and you can use your own calculations to figure out sort of what the likely scenario would be for you. Now, there are alternatives to reverse mortgages. That's, of course, the banks which offer them probably don't tell you that so sort of readily, but lots of people downsize. So they just see that they've got this 4-bedroom house, kids have all grown up, and it's time to just let it go, move into something more practical, and do that before it's too difficult to move. So I know that, people do get a little bit too old for the prospect of moving, and then it becomes a big mountain to climb. But really, the sooner that you do that, the sort of easier it is to sort of manage everything and sort everything out. So that is one option. Secondly is sell your home to your children, who can also take up a mortgage to buy it. This kind of frees up your cash, and it also lets you, release the equity, have the money, and then nothing's lost to your children through a reverse mortgage. And then you can also consider a retirement home. You can sell and buy those. Of course, they have their own problems and own sort of costs, which there's plenty of sort of documentaries about on things like that. But it is worth sort of considering if that is going to be your plan later on as well, because if you are wanting to move into a retirement home and you have a reverse mortgage, that can severely cut back on the amount of free money that you're left with after the reverse mortgage is paid once your home is sold. And then you can also consider renting out property within your home. So that's if you wanted to have a self-contained unit, if that already exists, or even a spare room. This isn't probably something that you want to be doing in your 70s, but of course, it is free money, and it's certainly something that some people do. You can also subdivide any spare land if that's possible, and that could chunk off, you could just segregate that and save quite a bit. Not practical for many properties, sure, but certainly for some that will apply. So what we want to have clearly say here is that if you did sign up for a reverse mortgage, or if you plan to, please make sure that there's four essential terms and conditions. So if you're a couple, both of your names need to be on it. That's because if something happens to one of you, it's going to be sold. That's the problem. That could trigger a sale but if you're both named on it, then you'll have the home until you need to sell it later on. But that's going to be a voluntary choice. Secondly, make sure that the contract allows for lifetime occupancy. This is really critical, because otherwise, you could be kicked out. Thirdly, make sure there's no negative equity possibilities there. So you need a contract which prohibits negative equity from happening. This won't be so common unless you live for a very old age into your hundreds, because the banks make sure that it's structured in a way that there won't be any problems there. But still, just make sure it also includes it. Now, the loan repayment guarantee, make sure that that's also included. So that means that you don't have to pay back the loan until you actually sell the house. So there's not some sort of trigger that you've taken out $120,000, we need $10,000 back to rebalance it or to do anything like that. Make sure that there's a zero chance of that happening. So what I said previously is that reverse mortgages come with lots of fees. That is very, very, very true, and we can just see some there from the Heartland Bank. That's just one example, but you've got the valuation fees, you've got the initial arrangement fees, you've got the top-up fees if you want to add on some drawdown. So for example, if you wanted out $5,000, you're going to get a 4875 because they'll charge you $125 each time. And then there's also end of mortgage fees and a few others. So we've done a little sort of example here just to kind of show you the way that these fees work, and and also some add-on fees on top of those. So there are a lot of fees, and they're not particularly what you probably want to be spending your money on in your sort of golden years, but that is part of the parcel of having a reverse mortgage. Sort of following on from that, it's critical to mention that a reverse mortgage has a floating interest rate, and that may jump up. Now I know that historically the last few years we've been in very low interest rate territory, but the OCR keeps moving, and that means that the floating rate is going to jump up if the OCR jumps up, i.e. if they increase the OCR, the bank rate, then that will mean there will be higher costs for servicing a reverse mortgage, or whatever the interest rate charge, that's going to go up. So if you've currently locked in at say 7.5% for a reverse mortgage, and suddenly the OCR goes up 2%, then you could be paying 9.5 or even 10%, and that can just move around. So what that means for you is that the debt that's racking up, that's going to increase because it's compounding. So we can see here, back to our compounding, if you borrowed $50,000, first of all, the interest rate was 7, and you had that for 20 years, then you'd need to pay back $201,000. But if the interest rate was at suddenly 10%, then that's going to jump up to $366,000. So you're going to have to pay back almost sort of 7.5 times what you borrowed over 20 years. And that's just because it's driven by this interest rate and that's what makes reverse mortgages quite expensive debt. Now, what we've said is that they can be dangerous, if your circumstances change later on, because your equity can be destroyed. As I've just said there, if someone had, $50,000 and then after 20 years, they actually owe 366, maybe the house is worth 700,000 or something like that. So by the time you pay moving fees and the estate agent fees, suddenly you're down to possibly $300,000 when you would otherwise have about 680,000 from selling a property. So this is why they do give people less options arguably later on, and we've done this example of Rod and Barbara here. It's worth having a read because it just talks about how their interest rate that was high, and then when it came time to selling, then the equity was a lot lower than they thought, and then they couldn't settle on a retirement home. That's just a typical kind of a simulated example. It's not a rule of thumb, but it's just something to be aware of. Now, who actually provides reverse mortgages? Well, it's two providers. So we can currently see from Heartland that their rate is 7.75. Of course, this is all subject to change. So if you are watching this video, we update this guide constantly, and so that's why it's not very useful for me to just talk about the numbers, any one time, but you can always see it here. So there it is, 7.75, and if we go to the SBS site, you can see that the reverse mortgage is 7.35, and because you've got your residential rates and you've got your reverse equity, which is your reverse mortgage rates. So you can see here that 7.35, if you just want to compare just as part of a sense test to some special rates. So they're offering a 1-year fixed or even like a 5-year fixed for 5.79%, but then you're paying a lot more just with the floating mortgage, with the floating rate from the reverse mortgage. So that's why it makes things a lot more expensive. Here you can see that they're actually prepared to do 1-year deals for like 4.15%. So you're almost paying twice for a reverse mortgage interest rate. So these are two of the main lenders. You may see other people providing them, but we believe that they will be issued by either Heartland or SBS. You might be introduced to it by a reverse mortgage specialist or some sort of broker, but we do believe that Heartland or the SBS will be writing it, would be issuing it. So that really sums up what reverse mortgages cost and what you need to be aware of. And we've got a series of frequently asked questions here, which we sort of suggest having a read through. I'm not going to read them all out because some of them are quite sort of detailed, but it is certainly worth having a read through, as I said. So just to conclude on reverse mortgages, so that it's pretty clear where we stand, we think, and this is certainly not financial advice, but we think there should be a last option given the high cost of borrowing involved, and no one has sort of any view of what interest rates will do in the future. So while now you can be sort of signing up for 8% or 9% or anything like that, 7.7% or something similar, interest rates could go up to 10, 12% or even higher later on. So that's a huge issue should you need to sell your property and fund a retirement home or anything like that. This is why if your circumstances change later on, having a reverse mortgage can destroy the equity in your house, and that's because it just ticks up, as I've said and shown on the calculator above, and then you're left with a lot less equity than you think, which gives you a lot fewer choices later on financially. We haven't talked about the emotional aspect of reverse mortgages, and that's largely to do with children and inheritance. Certainly not something that we want to talk about. It's nothing we're talking about the financial product here, being the reverse mortgage, the pros and the cons and the costs and what to know, not so much what children should be entitled to or think they're entitled to. It's very subjective. It's, of course, we'd never cover that on MoneyHub because it just comes down to an individual family talking about these things. So that is something to talk with your children if this is going to be an issue for you, or you are thinking about a reverse mortgage, because children have their own expectations and their own needs, and so but we can't comment on that. So if you do decide to proceed with a reverse mortgage, please make sure that it's set up in the best possible way, so you can't get into negative equity and the property can't be sold by the bank during your lifetime, and that you do not need to make repayments. And then lastly, make sure everybody who's going to live in the property is named, i.e. husband, wife, or partner, or something like that. Because the issue is, if someone who's not named survives, but the person who was named passes, then that's going to trigger a sale, and that's a huge problem. So yeah, make sure everyone's named that needs to be named. Talk to a mortgage broker about it, talk to a lawyer, because there are a lot of things to consider, like in your personal circumstance. So yeah, please let us know any questions that you have in the comments below. You can also email us at MoneyHub. You can find us in the contact section. But yeah, please don't rush into these things, because while the video here is around half an hour, we could easily do 6 1-hour videos and everything that you need to consider, because there's so much material on it. There's there's basically high costs involved, and it's really much like an end of life financial decision that could be go really wrong if you don't plan or you don't foresee something. So once you take the money out, it's pretty much a ticking ticking along at the interest rate, and that makes it an expensive debt to settle. So thanks very much for watching. I know it's been quite an intense video, but we're very passionate about sharing the information. For more information about it, then you can look at Age Concern. You can contact them as well. I'm sure they'd love to hear from you. And as I said at the start here, we are linked and referenced quite significantly, so we know that reverse mortgages are one of these things that are being talked about throughout the country. You can also see information from Consumer, and then they also link out to Heartland and SBS. So thank you very much for watching, and I look forward to hearing from you.